Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth right here in Singapore. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I've produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends. If you're serious about taking your Singaporean investment journey to the next level, you'll want to hear this. Here's the problem most Singaporean investors face. They think dividend investing means buying DBS, OCBC, and maybe some REITs. They're missing out on a treasure trove of 6% plus yielding opportunities that could supercharge their income portfolios in ways traditional blue chips simply cannot deliver. The surprising solution? I've distilled this complex landscape into 7 crucial insights that will completely change how you think about dividend investing in Singapore. These insights will directly impact your wealth growth journey by showing you where the real alpha lies beyond the typical bank REIT playbook. Today, I'm breaking down Singapore's hidden dividend diamonds, companies offering superior yields while operating in sectors with genuine cash-generating power. Here are the 7 key points we'll cover. First, why traditional dividend picks are losing their edge. Second, the Tier 1 high-yield champions delivering 6% plus returns. Third, the steady performers in the 4-6% range. Fourth, how to build your dividend diamond portfolio. Fifth, the tax advantages for Singapore investors. Sixth, why the current macroeconomic environment favors these plays. And seventh, my personal take on sustainability and what to watch for. Let's start with why your current dividend strategy might be outdated. Singapore's dividend landscape is undergoing a fundamental transformation that most investors are completely missing. While everyone obsesses over whether DBS will maintain its dividend yield, banks are feeling the squeeze. DBS currently offers a dividend yield of approximately 5.08%, OCBC yields 5.21%, and UOB provides around 5%. These are solid, but not spectacular. The real opportunity lies with companies like Bumitama Agri, which quietly upgraded their dividend policies and now offers an impressive 8.74% yield. Think of it like this. While everyone's shopping at the popular mall, you're discovering the hidden gem stores with better prices and quality. Now let's dive into the Tier 1 high-yield champions. Bumitama Agri stands as the crown jewel, trading at SGD 0.76 with that impressive 8.74% yield. This palm oil producer recently paid a final dividend of 5.44 Singapore cents per share for 2024, with a sustainable payout ratio of 60.77%. Palm oil prices have shown resilience, and the company demonstrates disciplined capital allocation. Venture Corporation represents something fascinating, a technology company mature enough to pay substantial dividends while maintaining growth prospects. With a current yield of 6.43% and a payout ratio of 88.78%, Venture is returning most of its earnings to shareholders. The company last paid a dividend of SGD 0.5s on May 19th, 2025. For even more detailed charts, deeper dives into the data, and a full written breakdown of today's topic, make sure to check out our Substack. The link is right there in the description. Moving to Tier 2, the steady performers in the 4-6% range offer compelling risk-adjusted returns. Wilmar International, one of Asia's largest agribusiness companies, offers a current yield of 5.56% with a payout ratio of 68%. Their extensive operations across Asia position them to benefit from rising food consumption. Genting Singapore represents a pure-play bet on Singapore's tourism recovery, offering a 5.56% yield. With Singapore's tourism industry rebounding, Genting is positioned for both dividend growth and capital appreciation. ComfortDelGro maintains its position as Singapore's dominant transport operator with a 5.37% yield, recently showing strong dividend growth of 16.67% year-on-year. How do you build your dividend diamond portfolio? Think diversification across sectors. A conservative approach might allocate 25% to high-yield diamonds, 35% to mid-yield diamonds, and 40% to traditional dividends for a blended yield of 5.2 to 5.8%. An aggressive approach could go 55% high yield, 30% mid yield, and 15% traditional for yields of 6.5, 7.2%. Here's where Singapore investors have a massive advantage: tax efficiency. Most dividends from Singapore-listed companies are tax-exempt for individual investors. This creates an after-tax yield advantage over fixed-income alternatives. Plus, these dividend stocks can be held in CPF investment scheme or SRS accounts, providing additional tax benefits for retirement planning. The macroeconomic environment strongly favors dividend plays right now. The 3-month SORA has declined to around 2.8% as of March 2025, down from higher levels at the end of 2024. This declining rate environment makes dividend yields increasingly attractive relative to fixed income. When you can get 8.74% from Bumitama versus 2.08% from SORA-linked deposits, the choice becomes clear. Now, for my personal take on this entire landscape, I believe we're at a unique inflection point where traditional dividend strategies are becoming obsolete, while most investors haven't caught on yet. The companies I've highlighted today aren't just paying dividends. They're upgrading their dividend policies and generating sustainable cash flows that make these yields probable for years to come. My direct advice? Start with a core position in Bumitama if you can handle commodity exposure. Add venture for technology diversification. Use Comfort Delgro for stability. But watch those payout ratios closely. Anything above 90% needs monitoring. The opportunity exists today because most investors remain focused on traditional plays. By the time these become mainstream recommendations, yields will have compressed. The key insight from my experience in Singapore's market: dividend sustainability matters more than absolute yield. I'd rather own a company paying 6% sustainably than one paying 8% unsustainably. That's why Bumitama's 60.77% payout ratio gives me confidence, while Olam's elevated ratios require caution. So, we've broken down Singapore's hidden dividend diamonds, and I've given you my personal take on how it applies to your journey here in Singapore. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent, daily dose of financial fuel for smarter decisions, delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today. Next up, check out my deep dive on CPF investment strategies, where I break down exactly how to maximize your returns within the CPF framework. It's the perfect complement to today's dividend discussion.